Inflationary pressures lately aren't so easy to conquer. What's the secret here?
It's so true, and we've seen negative effects across some of Warren Buffett's Berkshire Hathaway businesses through the last couple of quarters, but at least this time around we did see Berkshire Hathaway posting a $10.04 billion operating margin, which is $2 billion more than analysts were anticipating. That's quite a difference in opinion right there. And as you say, he had to deal with rising prices, a troubled insurance market, and a dearth of deals. So what saved Berkshire Hathaway this quarter? Well, actually strength in its insurance business. For one, it saw a 74% increase in underwriting earnings to $1.25 billion. Now there, it benefited from the acquisition of Allegheny, which it did as an underwriter, and also Geico performed way better than expected, the auto insurer, of course. It had been unprofitable all of last year, but it's now been profitable again for 2 straight quarters. More expense cuts, higher premiums, and lower claims. There are some things in the negative column, including BNSF. The railroad earnings there were down 25%. Higher expenses, more headcount, in fact, which is all part of the same bucket, if you like, and also just rising costs there eating into that. But interestingly, the continued rate rises are also helping Berkshire, right? It now has a cash hoard that's almost at its record ever cash hoard at $147.4 billion, and it's earning a much nicer yield on that $147 billion than it did before. We also know that Buffett continues to buy treasuries. He said just last week another $10 billion, plus probably another $10 billion worth of treasuries this week, in spite of the Fitch downgrade.
Vonnie, what is Berkshire's positioning in terms of investment activity going into the second half reveal?
Well, interestingly, it's become a net seller of equities. And by the way, I forgot to mention that its holding of Apple, which has expanded, also helped add to that $10 billion in operating profit, because Apple obviously up 48% this year. But this quarter, it sold $12.6 billion in equities and bought just 4.6. So a net seller to the tune of about $8 billion. And that's the theme throughout this year. If you look at last year, for example, Berkshire had bought something like $34 billion worth of stocks. This year, it's already sold more than $18 billion of stocks. So positioning very, very cautiously. It's also buying back less than it was. So this quarter, it just bought back about $1.4 billion of its own stock. That's down from about $5.8 billion in Q1. Elevated valuations, and that's another reason why it's not finding more acquisitions. Still, Heidi.